workings here for the final accounts. So we're going to look for cost of sales, our distribution costs, and we'll have admin expenses. So we have to find our cost of sales, and our typical first cost of sale will be our opening stock, 72,000. No need for words here, just the figures. And then we've got purchases of 1260, 1,260,000, to which we'd add any carriage-in or customs duty, not applicable in this case. But what we do have is a patent write-off where they tell us in adjustment 2 that the patents were acquired for 60,000 and they're being amortized over 10 years. So 10 into 60,000, 6,000 as a cost to be included in our cost of sales. So we've got 6,000 here, and of course we take off our closing stock under the trial balance. Closing stock, 85,000 euro. So that's the composition of our cost of sales. The distribution costs are in the trial balance at 194,000, and the admin expenses are entered in there at 206,000. Now remember, what we're doing is that anything that looks like a selling and distribution expense will be put in there, and everything else other than interest will be put in as admin. Note 4, we have the depreciation on buildings. 2% straight line, 2% of 880,000, of 17,600, and it says to us that 40% of that is distribution, so I make it 7,040 of the 17,600. 7,040 is distribution, that's 40%, and the 60%, the 10,560. Will go in as administration expense. We also have the depreciation on the delivery vans. There's 15% of cost on the vehicles, and 15% of 260,000 will be 39,000. So we have another distribution cost here, 49,000. So we just have 3 items making up our distribution costs. And then for our admin, we have 206,000. We've added in the depreciation of the buildings, its portion of that. And then we have in our, under the trial balance, segment 3, we've got added fees, 6,500. And we have directors' fees, 35,000. And we also have an awkward one there where it says that discounts received, which of course is going to be put in as some other operating income. We have discounts received at 18,500 that has been included in admin. Now you must avoid the temptation to subtract that 18,500. Don't do that, because the way we're meant to look at it is, you see, discounts received is we're treating it as income, so that's a credit entry. And we've got a credit entry incorporated in our expenses, which is a debit balance. So we want to take a credit entry out of admin. So the only way we can remove a credit entry is to debit the account, and that has the effect of adding, in this case. So it's plus 18,500 for admin. Then we have a calculation to do, I think, for our debenture interest. Debenture interest paid is 8,000. We have 8,000 for debenture interest, but if you check out the debentures, you'll see that they're 5% debentures, 200,000, so that should be 10 grand. So we owe another 2, so that gives us our 10,000 for interest charge in the profit and loss account. So that set up our expenses. And then we're going to do another line for our other operating income. Now remember, we said already our main operating income is sales, but we have some other operating income in this question. We've got patent royalties, reading in the trial balance from the bottom up there. Patent royalties, €14,000. We have rental income. Remember, your incomes will be in the trial balance as credit entries, credit liabilities, gains and sources of income. So our rental income will be 64,000. And we've got that discount received of 18,500 that we've removed from the admin expenses. So that gives us our other operating income. So we're set up here now to do our published trading and profit and loss account.